How to be a successful investor? The answer is stay with what you know. Don't listen to me. Don't listen to TV people, internet people. Just stay with what you know. David, if I told you you can only have 20 investments in your life, you would be very careful. You wouldn't be jumping in and out, listening to hot tips every day, every month. You would stay with what you know, and you would become a successful investor.
In today's video, Jim Rogers, chairman of Rogers Holdings and co-founder of the legendary Quantum Fund, gives the best investing advice. He believes that the key to becoming a successful investor is to stay with what you know and avoid hot tips. Focus on what you have knowledge about and invest in things that you are familiar with. When you see something that you know is going to be successful and exciting, do your research, figure out if you should invest and how to invest. Read the annual reports and notes to understand the numbers and competition. The best way to find good investments is to look for things that are ignored and hated because they are likely very cheap. However, it's important to also look for a positive change taking place. Whether the style picks you or you pick the style, it's important to find what works for you through trial and error. Here is more of what Roger had to say.
Everybody watching this knows a lot about something, whether it's fashion or cars or sports or something. When you see something that you know is going to be successful and exciting, don't just say, oh, that's going to be great. Don't tell all you. Then you go and you do your research and you figure out how to and if you should invest and how to invest, and then you invest. You will know it long before I will, or long before other people in the investment community. You will also know when to sell, because you will know when something's going to change again. Nobody likes to hear it, David. Everybody wants a hot tip. Everybody wants to be rich this month. Well, the second advice is don't listen to hot tips. Stay away from hot tips.
Yeah.
So just stay with what you know. I mean, it's boring and nobody wants to hear it, but that's how you become successful. You know, in those days, we did nothing but focus and concentrate and dig deep and dig deep and dig deep. That's how you become successful.
Do you think an investor at one point consciously picks a style, let's say value versus growth, for example, or is it more that the style picks the investor, meaning that eventually it conforms to her personality?
Well, that's a good question, but I think it's the answer to that question is figure out what you yourself know best. When I first started, I had no clue. I once worked for a guy who was a genius trader. I mean, he were about 50 or 100 stocks on the stock exchange. He didn't know much about them. I mean, he knew IBM was a big company, but he didn't know he knew very little. But my God, he could buy and sell it. He once said to me, there's a block of 100,000 IBM for sale on the floor of the exchange. Go buy them for me at 90. I said, what are you talking about? How do you know? He was just sitting there reading the newspaper. I mean, the tape was running by. In those days, they had the tape running by. Sure enough, it was there. I mean, he was a genius short-term trader. He never owned anything longer than a week or two, but my God, he was good. But I am hopeless. I'm the worst short-term trader in the world. So everybody, I didn't know that people had different styles. I didn't know that wouldn't work for me, but eventually I found by trial and error what I was less bad at, but I was reasonably good at, and so I found my way. I know I'm a terrible short-term trader. Well, I don't even try it anymore. I didn't know it then, but I found out. And whether the style picks you or you pick the style, for me, it was trial and error. First of all, you looked at all of those things, the income statement, the balance sheet, etc. You know, I found, David, early on that if you read the annual report, you do more than 90% of the people on Wall Street. If you read the notes to the annual report, you do more than 98% of the people investing. So back to what I said before, do your homework. But this is not easy. Everybody looks on TV and they say, oh, I could have bought Apple 30 years ago. I could have done that. Well, maybe they could have, but they didn't, because it's not easy. So you have to do your homework. You have to research. You have to do the balance sheet. You have to understand the numbers. How do I do it? I don't know. By now, I've done it, thousands of times. So I have a little bit of experience. I have a little bit of self-knowledge and experience. And so I look at things that I maybe didn't know about before. But I used to be a professor and I explained to them, you have to understand the numbers, first of all, but then you have to understand the competition. You have to understand everything. This is not easy. I wish it were. One of the things that I have learned about me, if something is really high and popular, I usually don't bother with it unless it's obviously a bubble, and then I will look at it to sell short. But mainly I look at things that are ignored, hated. I want something that if it's hated and ignored, it's probably very cheap. That does not mean I will buy. You have to find something that's hated and cheap, and then you have to find a change taking place. For many decades, I was anti-Russia and Soviet Union. Only time I ever invested in Russia was I was short the ruble once. But then in recent years, I have come to realize, my God, this place is hated, very cheap, low debt, and I thought I perceived a change taking place in the Kremlin. And that's the second word you need to understand, cheap and a positive change. So if you can find something that's cheap and a positive change, you're probably going to get very rich. Well, when I was 30, I was on a roll. I mean, you said we made 4,200% in 10 years. When the market made, I wouldn't do anything different. I found my niche. I found what I loved. I found what I was good at. So if you're looking, figure out what you love the most, whatever it is. And if people laugh at you, you're probably really right. You're probably really doing the right thing. Just find your own passion and stay with it. My passion was, and still is, but especially then, my passion was the investment world, all over the world. It didn't matter. We didn't know about countries. We didn't have all these labels about value and blah, blah. We just found things that were cheap and bought them, or found things that were expensive and sold them short. I loved it. So if you can find your passion, whatever it is, that's what you should do. Ignore your friends. If you say, I want to be a gardener, David, everybody's going to laugh at you. You go and become a gardener, because if you love it, you'll never go to work. You'll wake up every day and have fun. You'll be the happiest person around. It won't matter if you're successful because you're happy, but you will be successful because those are the people who are the most successful. So David, find your passion, whatever it is, and then do it. At first I thought everybody was smarter than me because they were older and been around more experience than me. Then I found that most of them made many mistakes too. I should stop listening to them. And I started realizing that if I could find things, that's when I started realizing a key for me was to find something cheap that was changing. And I realized about the numbers and the balance sheets. I told you before, I realized that I was once working on reading an annual report and doing a spreadsheet. An experienced guy walked in the room and said, people still do that? Nobody looks at spreadsheets anymore. Laughed at me. Well, I mean, I was embarrassed, but I kept doing it. That was what I loved, and by experience, I learned that if I understood the numbers and I understood what was going on, I was to be ahead of other people. It wasn't easy, but it turned out I loved it, and I loved to track down everything, but it was purely by experience and learning that the more I knew about the companies, the competition, the numbers, the more likely I was to be successful.